I think MicroStrategy definitively created the playbook, and then you had a good copycat, well, very successful in their own right, MetaPlanet doing this playbook out in Japan, and that spawned the ethos of DATs. Okay, well, what if we did more Bitcoin treasuries? What if we did treasuries for Ethereum, Solana, and give whatever altcoin that you want, right? And I think what you have to understand is what you pointed out, there are different routes to market, right? What is most important here is the expediency, and there's a trade-off. You either have a very clean shell or you get to market faster. First was through an RTO, and that was done by the Nakamoto deal with Kindly. And while that was the first one of its kind of creating a DAT, folks soon realized this is actually quite time-consuming because the capital raise cannot be deployed to buy the underlying asset anytime soon. There was a couple months waiting process, right? And so people then quickly found within the legal confines of the capital markets to say, how do we get to market faster? Oh, why don't we find a zombie co or an opco to say sub $10 million market cap, and that looks clean enough, buy them out, juice it with insert asset token, and therefore that becomes a DAT, right? The market should then value it based on that story as opposed to whatever the opco was before. Maybe it was a vape company, maybe it was a biotech, maybe it was a random fintech company. So that's a second route. And that, what we've seen, is the most expedient way to get to market. The third route is SPACs. And what we've seen, most SPACs have been done with Bitcoin because you can raise large enough size. Usually you want to be $1 billion and above to make the economics work for all parties involved. Now, there are some SPACs that have been done for alts. I think ETHZilla should be one, and there was an Ethena one. Those were smaller than $1 billion, but the advantage for them is, hey, look, by going the SPAC route, you're listing a shell that ultimately is clean. There was no historical operating entity that might have some contingent liabilities that will come back to bite you. But with the SPAC, your go-to-market might be 5 to 6 months. So really the trade-off between people looking to do a DAT now is, do I want the cleanest shell possible? If so, you got to raise enough to make it worth it and go through a SPAC route. Or speed to market is important. I will reap what I sow with the company that I buy, and then before they go buy one of these zombie shells.